All right, and next up we have Sage from ALUULA.
Hello, everyone. Thank you for sharing your lunchtime with me. I expected you to come with like a brown bag or a plate or something, but nice to see everybody. We'll get started. This is our Q3 investor results. Standard forward-looking statement, the most exciting slide of everyone's deck. So who is ALUULA? ALUULA is trying to do no small feat in revolutionizing the textile industry. And as we go through today, I'll talk a little bit more about how we plan to do that. As any great tech company, it started in a garage with a couple guys obsessed about performance. It actually started out of a windsurfing desire to jump higher and go faster. So that was the start of the company, and the name ALUULA actually originates from a very small bone in the wing of a bird that's necessary for flight. So why now? Why does a company like ALUULA make sense in today's market? And you know, I was thinking back, there's probably a few people in this room who are of a similar age, but the last real innovation I remember on the textile side was in the 90s when my in-laws bought me a ski suit out of Gore-Tex. I couldn't afford it myself, but I was thrilled because it offered a different level of waterproofness. And if you ski on the West Coast ever, you know how important that is. But it really changed things. And I think when we look at that as a marker of a revolution in an industry, that was 30 years ago. And I think we look back and we can realize that there hasn't been a lot of major innovations in this textile space similar to that since then. So this is a $60 billion composite market space. What's really driving that 9% CAGR is a need for high performance and sustainability at the same time. So when we look at Gore-Tex 30 years ago, fantastic on the performance side, but knowing what we know now on PFAS chemicals and their forever impact, et cetera, we know that you have to have that high performance with sustainability. And right now it's still been a bit of a trade-off, and that's why ALUULA is getting some really good traction in the markets that we're playing in. So how do we go to market? ALUULA is a little bit different in that we are partnering with high-performance brands, so we will co-brand with them. We go in as an ingredient brand. What's really unique about ALUULA as an ingredient brand is that you actually see the product. So yes, we'll have an ALUULA logo on the brands that we partner with, which offers great marketing and great exposure for us. But the other difference is you look at the ALUULA material and you know that it's ALUULA. So if you're walking behind someone with a backpack, you can visually identify, even without seeing that logo, that it's quite a different material in how it looks and feels. We end up working also with the manufacturing partners of the brands that we work with. What that does is help us really embed ourselves into their cycle. So ALUULA offers no-sew construction, so you can weld seams, so you don't have that seam weakness point as other designs do. What it also means is that we're shifting manufacturing to be more efficient. So as opposed to having row on row on row of sewing machines, manufacturing partners now have the ability to weld much more quickly and much more efficiently. So you'll see that change in the economics for our brand partners. So the value to our brand partners is really, you get to tie into the ALUULA brand, which is seen as very high performance and very premium. We have to build that out and maintain that. But you're also seeing an improvement in unit economics and efficiency on your manufacturing. So it's quite attractive for our partners. And our partners are recognizing this because what the ALUULA material is enabling is new designs that haven't been feasible before. And we'll talk about that a little bit when we look at some of our material choices today. So like every great capital markets transaction or presentation that talks about what makes their product different, I like to quote Dr. Seuss, because why wouldn't you? Why fit in when you were born to stand out? When you see and feel ALUULA's material, you know it's different. So in a lot of markets, we are replacing a nylon or a polyester or a Dacron. When you look at ALUULA's material, it does look quite different. This is a composite, right? So this is a high-performance composite material. If someone is looking for nylon or polyester, don't buy ALUULA. If they want a unique, very high-performing composite material, that's when you come to ALUULA's material. Because it offers a very high strength-to-weight ratio, it offers UV resistance, high performance in extreme environments, and it is patented and adhesive-free. And when we talk about the product itself, you'll understand that adhesive-free. That adhesive-free also ties into how ALUULA becomes recycle ready and we're driving towards full circularity. So a core aspect of the reason why I joined the business and a number of our executive team is the fact that we're driven by creating products that are also sustainable. And I think sustainability tends to be a bit of an overused word, but for us, it's a core cultural component. We look at sustainability in how we manufacture. We look at sustainability in our financials and ensuring that we're building the business to be financially sustainable as well. We're driving towards full circularity in our product. And then we also build products that will last in the industries that they play in for a lot longer. So we want that badge of honor that products are not disintegrating and degrading quickly, and they're lasting for a lot longer. And then when you're finally done with it at the end of its useful life, you can fully recycle it. How does ALUULA differentiate within the marketplace? It does go to that recyclability, right? A lot of the customers that are coming to us, like Michelin, came because the material is sustainable. When we compete in those high performance categories, you need to see the high performance balanced with the sustainability. So ALUULA's intellectual property is on the product and the process, which enables us to create this composite material without the use of adhesives, providing that mono-material recyclability at the end of life. So it is a polyethylene-based product, which allows it to be recycled at the end of its useful life. And what we do in this kind of creation of a new material is being recognized in the industries that we play in. We're a young company, so the first kind of commercial products in the market were in that 2023 range, being sold to customers that were outside of our own subsidiary. Our new team has been in place really for the last 6 months, so we're just getting started at the objective that we have, which is to revolutionize the industry that we're in. So what is the material actually made of? Our material is, as I said, a mono material based on polyethylene. For the engineers and scientists in the room, we've got an ultra-high molecular weight polyethylene core. So ultra-high molecular weight polyethylene is not new. It's very well known in the high performance space. It's used in ballistics. It's used in a lot of different areas. There's companies like Honeywell and Dyneema that have been producing these fibers for decades, 30 years plus. But the challenge has always been that it's very hard to get anything to stick to it. So what those companies have been doing is using adhesives to put other layers on the outside to create a waterproof layer or a gas barrier, depending on what they're trying to achieve. What ALUULA's come up with is a way to manufacture without that adhesive that uses a combination of pressure, temperature, tension, time, and witchcraft and trade secrets in order to come up with this product that is adhesive-free and is fully fused. So it's not going to delaminate in the same way that our competitive products do as well. So what categories do we play in? On the light end of our range, we're in that 25 grams per square meter. We announced last week that our first ultralight tent material has gone out to the market. That's in that 25 grams per square meter. And then as you move up in our weight categories, our heaviest material today is 220. That's being used in large structures where people are actually inflating the tubes to be used for building the structure itself. Inflatable rafts, things like that. So there's a number of uses across our categories, but all of these materials share that same ultra-high molecular weight core, so there'll be a difference in weight for that strength, and then they'll have different layers on the outside, top and bottom, depending on what type of performance criteria you're getting to. The other key aspect of all of these products is that they're all heat weldable. So they all enable no-sew construction, which is absolutely essential for our customers as they build out their products. Customers like Arc'teryx were very early to adopt ALUULA. They recently released in this year, 25, they released the first Arc'teryx backpack using ALUULA's materials. It sold out quite quickly. We were happy to see that. And it's receiving quite strong reviews because of the fact that it's starting to open up and people are starting to understand that there's new construction methodologies that have never been possible. And when you look at Arc'teryx's bag, again, a very early example of what's possible. They are doing some heat welding. They're putting their logo between layers. Like there's some interesting ideas that they're coming up with how they work with the ALUULA material. And all of this comes in an accelerated development for us. So as I said, we're fairly young in our go-to-market strategy. I joined in the start of 2024, and that was kind of moving the company into more of a professionalism from our RTO. That's how we came into the market. navigating to focus a little bit more, narrow down our SKUs that we went to market with, and then accelerate our technology development as well. So we need to make sure that we are evolving and staying in front of the market, because we know that competitors are trying to figure this out. We are first to market, and we will retain that market leadership position. And this goes into even in our Q3 results, where we started to disclose that we are working on a waterproof breathable made out of ALUULA materials as well. So the current markets that we're focused on, and you would have seen this in the slide where we talked about what products we have. First market we entered was wind sports. So we have every customer we want in that space. It's not a high growth market, but it's a really great stable market for us as our first market entered. Next market we went after was bags and packs. That's our next most mature market, but still quite young. You'll have seen a number of packs come into market with the ALUULA brand on it, and we'll show some logos of that on the next slide. We're getting early testing in apparel and footwear. And then the large area that we're quite excited about, because again, remember, ultimately we sell meters of material. And so when we look at commercial and industrial uses, not as sexy, right? It doesn't matter as much if they have the ALUULA logo on it. But when you're looking at a kite on the front of a cargo ship that's using up to 5,000 meters of ALUULA material per cargo ship, it starts to become a quite attractive market. And uses like that, the cargo shipping one, were not possible before ALUULA's materials, because there was nothing else that was as light and as strong that could withstand the UV and the salt water. So you have a 20% fuel savings possible on that cargo ship, enabled because of this new technology. We are in discussions and working relationships at an R&D level with a large number of brands. We can't disclose that because we're under confidentiality agreement. Once the brand releases their product and is speaking to the public market about it, then we can talk about it. So you'll see a lag in our pipeline, and I'll talk about that in one of the next slides, where we are in very active discussions and selling meters of material to a large number of companies that are testing and out in the field and doing their R&D testing. And then once they release the bags or the packs or the tents, you will start to see their logos show up on this slide. So recently, Osprey released their first bag, and we've had a number of other ones do quite well in the market with their first releases this year. So still very early stage in their first products coming to market. Our revenue is a little bit lumpy. This is a new industry. This is a new product in a new market. We don't yet see a lot of seasonality because of our distribution across different categories from an industry perspective, but we do see consistent growth. So our Q3 numbers, we released about 2.2 million Canadian in revenue. We're guiding the market to a 40 to 45% gross margin, and we expect that to be able to continue. And our push is to keep finding more efficiencies in the business. So this goes to that sustainability point, right? We are pushing aggressively on growth, but we can't forget the operational aspects that drive to that bottom line. And that's going to be a continual tension in our 20-person team, which I'm perfectly fine with, where we have the commercial team and the R&D team pushing really aggressively to see that future forward-looking growth. And then we have production really caring about margin, right? We've got to get quality product out the door at a margin that makes sense for our customers and for our shareholders as well. I spoke earlier about the change in sales by channel. This slide shows how early ALUULA is. So when we look at market penetration in the areas that we come into, we have a fairly long sales cycle. So because this is a new material, the customer will request samples. They'll buy slightly larger meterage. They'll do field testing. They'll do a small sample run to their manufacturing partner, and then they'll do their first commercial launch. What we see is that we're very sticky. So once they get into that field testing, and then once they understand the unique aspects of the material and they're starting to create the product in a different way, like an ultralight tent that's welded, no seams, then they start to see that there's something really interesting with ALUULA's materials. And by the time we move into their manufacturing partner and we're on the manufacturing floor, and we're actually working with the manufacturing partner on how to learn how to work with the ALUULA material, they're adopting that material into their manufacturing process. So we may see small runs initially, like Arc'teryx did, but then our hope is, because we're then embedded, that we can grow that over time as volume increases. And we're seeing and we track the increase in those categories that we're looking to prioritize. So when we spoke earlier about bags and packs, moving into ultralight tents and shelters, and then of course the defense category as well will fit into the commercial and industrial side for us. cap table. This was cap table as at the end of the quarter. There's some notes on the bottom as to the evolution within that cap table, in that we had some warrants exercised. But the key aspect of that is that our insider ownership remains really strong. We're about a 45% insider held at this point. We have a very strong, as I said, we've got, over the last 6 months, we've kind of brought a new team in across the board, but at the executive level. Tyler, our CSO, who's a polymer chemist, is in the room. Sven, who was really key at bringing MIPS, which is a very well-known ingredient brand, to market. He also did RICO. Myself, I've got 15 years in the C-suite. And our board of directors, as well as our board of advisors. Just one example, Christophe Dardel, he was the CEO at Dyneema for 10 years. So we're really lucky to have him as he led them through their growth as well. And Ian, who is a VC partner at Closed Loop Partners, which is very focused on sustainability and circularity. It's a very busy slide, but why ALUULA and why now? Effectively, as I noted, we're really pushing to revolutionize an industry against products that are more than 30 years old. So they're ripe to be revolutionized. We have products that we're replacing in the market that are commodities, right? They haven't seen change in a long time, and the market is pushing for this change. The market wants high performance and the market wants sustainability, and there are not many options that enable that. We're seeing extensive growth. It's still very early. As we track that growth, we're also focused on our margins, as I said, to show that bottom line performance over time. And at the same time, there's two kind of asset values that I focus for our team to build out. One is our corporate brand. When you're tying in beside a North Face or an Arc'teryx or Parbat or these large brands that are well known globally, that does great for your corporate brand presence. And then we also have our intellectual property and trade secrets and trademark portfolio that we're spending an extensive amount of time on building and growing out as well. So business performance on one side and then future asset-based growth on the other, which for us as shareholders are kind of key aspects to how we look to differentiate ourselves and really compete against those commodity players, because most of the players we're competing against are multi-billion-dollar companies. So I usually leave with an ask. Everyone's like, well, what can we do to help? Which I like that as a question. If you go into a performance outdoor store, ask them if they have anything that's ALUULA. I think that's a great place to start, because we have brands coming to us saying that they've heard that they need to talk to us. We've been very fortunate to have proactive interest coming in. We're just starting that proactive outreach. But I think the more people go in and ask for ALUULA products, the more well-known we'll become, which can only help each of us as shareholders and doing better things for the planet on the sustainability side. So feel good all around. But that's the presentation, and I'm happy to take questions. Questions about the press release out this morning? Anything? Yes?
How do you current product designs do you have, and how do you measure visibility? Is it, thousands or tens of thousands of metric feet of fabric? What's the price point, and how does your price point compare with the next most non-sustainable alternative?
Great question. So question was, how many products do we have? How do we set price point? How does a price point compare to our competition? So to answer the how many products, I would say when I started, way too many. I think it was a standard problem of an early stage innovative company that we kept coming up with new ideas. And the really interesting part of ALUULA is that it's a platform, right? So we can create custom stacks based on what the need of the customer is. So that's a pro and a con. What it meant is that we had over 500 SKUs. That's too many. So we had to pull that back and narrow to focus. We have kind of a top 10 that we're focused on now, which you saw in that product slide represented. From a pricing perspective, we are priced similarly to the highest performing materials in the category. So if we use Dyneema as an example on the ultralight tents, we're very similar on a price per meter and a ultimate weight, but we will, and we've shown in the testing, last much longer, so you don't get that degradation with the glue. So I'm happy for us to be one of the highest price points in the categories we play in. And I think from a brand perspective, every product that gets released that is very high performing, that has the ALUULA price tag with it and the ALUULA brand with it, I'm good with that. So we are a premium price product in the categories that we play in. And I hope that we can retain that. I think as we grow and as we have the ability to go downstream a little bit, that would be a good challenge to have. But right now we want to stay in that high price point, good margins, and offering that performance to our brand partners that justifies that price category. Yeah.
So within made in BC, roughly how far, I think about capacity, how far meters to go on that?
Yeah. We think about that every day. So the question was, is everything made in BC, and how do you think about capacity, and where's the bottleneck? Yes, Victoria, British Columbia, the manufacturing hub of Canada. All joking aside, we are fully manufactured in Canada and in BC. So this is a high-touch product. We hand manufacture every roll. When we look at our COGS, that cost of labor is actually not a huge component in that COGS. The input materials are more costly because ultra-high molecular weight polyethylene is quite a costly input. So us maintaining control of that manufacturing right now is very important. It's important for the quality and consistency of the product. It's also important for maintaining trade secrets. So yes, we are manufacturing locally and we will remain that way. Right now, the constraint from a capacity perspective comes to two components. One is number of people, so amount of hours that we're actually running our production equipment. And we disclosed in our Q3 results that we are running on average about a 12-hour shift, split up, staffed, and then we're doing about 1,500 meters per day within that 12-hour shift. The variability that sits within that, of course, comes back to that SKU question of how many products we have. If we do our one main product that's still consisting of about 70% of our revenue, we're very efficient, right? We get more efficient the larger volume that we do with each product. So that 1,500 meters is kind of in that optimal situation for us. So we have that variable to be able to add more shifts and then add in more production capacity. That takes time. When we hire staff and we train them, it takes 2.5 months to get a production employee up to speed producing at that level of quality. And then the other aspect is capital. So our equipment. Our equipment was built to manufacture at 1 meter lengths. That was done because a human being individually can pick it up, and it was small enough that we could go into the market and prove that this was a workable product. But what that meant was we were not the industry standard width, which is 1.5 meters in width. Once you get up to rolls at 1.5 meter, you need forklifts, you need larger warehousing, you need larger inventory management. So we knew that it was necessary for us to evolve to 1.5 meter. Certain uses like spinnakers, the cargo shipping options, they require 1.5 meter to become fully commercialized. But we didn't want to just take our current process and make it larger. What we did is actually go back to the drawing board, and we said, let's take everything we've learned and let's optimize from here. New scientific perspective coming in of how we analyze data, go back to the drawing board on manufacturing. And we just released last week that we have successfully manufactured in a new method of manufacturing at 1.5 meter for ultralight tents, which we shipped out our first shipments last week. And that will now enable us to open up that market. What we've done on the CapEx side for that is a bit of a interim solution. It's not pretty, it's clunky, it's not that efficient, but it'll allow us to get into the market at 1.5 and then be able to de-risk it with customer demand. So that's the phase that we're in right now. And we're also in a phase where we're going through with our board, our budgeting and our planning. We'll look at CapEx. And then once we have clarity on that, we'll come back to the market as well to talk more about what that future expansion looks like. Because we have aggressive growth targets internally that we're focused on, and our current physical footprint at that 1 meter manufacturing cannot sustain that full growth that we're looking at. You're welcome. Yeah.
Can you elaborate on your unit economics? So on your cost line, roughly speaking, what you're able to answer about percentages to raw materials versus manufacturing. And then if you could go further, what would be to labor, energy costs, and other consumables? And then are you buying raw materials and trading on speculation, acquiring future contract work, or are you buying when you get a job order? You walk us through how that works too.
Yep, so the question was around our COGS, effectively what makes up our COGS and how we run our manufacturing process from order. So I'm not going to get into an extensive amount of detail of the breakout of the COGS, but the largest input cost is our input materials. So we are sourcing our input materials from various suppliers. We have A/B suppliers for all of our core inputs. We did that to manage risk, right, from a geographic perspective as well as from a quality perspective, and to keep costs where we need them to be. So that's a large portion of our COGS. When we look at how we manage production right now, because cash flow is a constraint, we're an early stage business that doesn't have a line of credit, right? We can't secure it right now. We will be able to, but it's a standard problem. So we're doing just in time. That just-in-time manufacturing has a couple of challenges. It means that we are slower to get material to our customers because we're also not stocking finished goods. So right now, if you're a customer who's not under a fixed 12-month purchase agreement like we announced this morning, then you're coming into our standard operating window, which is you put a PO in, and it can be 4 months before you get your material. Our customers are willing to wait because it's a very differentiated material, but we want to be able to speed that up because that'll allow our revenue growth to increase more quickly as well. And that means having a little bit more cash flow to be able to do that. So the working capital is key. When you look at the warrants that were exercised, that all went into working capital. We did a rights offering at the beginning of 25, that went into working capital. So that just-in-time manufacturing means that the more that we can speed that up, we can stock some input materials in advance. We can change payment terms, right? When we talk about that operating focus and we look at how we manage that cash flow, the terms that we talk about with fixed purchase agreements are very key. Can we get some portion of payment up front to de-risk it, fund the input materials before we're collecting on the invoices that we've sent out? So we're really focused on the management of the cash flow through that whole cycle so that that cash conversion can speed up over time. So that gives us gross margin focus and cash flow focus as well. So may not have gotten as specific to your question, but hopefully that answered some of your.
You said it's a large portion. Is that like 80% or like 25 or just like roughly the order of magnitude?
Let's say over half.
Okay, thank you. That's it. That's good.
Yeah. Yeah. Other questions? I've got 1 minute left, so one more question if there is. Yeah. Sorry.
The people who use materials coming onshore to manufacture.
Absolutely. Yes. Yeah, I think the evolution that we'll see is an evolution of manufacturing facilities to support this and more efficiency to it as well. And we're just starting to see that. So not a lot of people are yet welding, heat pressing, thermoforming. But I think as we start to see the ability to make a product like that, that's going to change versus a multi-stage sewing process in the manufacturing floor. So yes, I think part of that sustainability aspect is geography as well. So I hope we see more of that. Thank you, everyone. Much appreciated.